This week has represented an absolute monster rally in the market. Riz is here, and we're going to talk about it on webinar here tonight. Good evening, my fellow Riz Elite members and all of our subscribers here on YouTube. And of course, if you're not subscribed, I want you to go ahead and click that like and subscribe button right now before we go any further. It would really help us grow the channel, and we really appreciate it. Now, this is our weekly market recap webinar where we talk about everything that's going on in the market, analyze things that are going on. And of course, tonight we have a very special guest, the man whose name is on the side of the building, Riz Memon. How are you doing tonight, buddy?
I'm doing well, Chris. Thanks for having me. It's good to be on. It's been a hot minute.
Absolutely. No, it's great. I'm glad you are here, and we really appreciate it. So we're going to go ahead and get things started here. Let's take a look at the S&P 500, and it has been an absolute wild ride this week, to say the least. Now, if you remember, if you watched webinar last week, you'll remember I told you guys we needed to bust through this 4180 area with some force, and on Monday we didn't quite make it. So there was some credence to what I was talking about. You know, we came up here, we pushed up to it, we pushed a little higher, and then we sold off pretty hard. Same thing on Tuesday. Now, of course, Wednesday was the big CPI day, and CPI wasn't as bad as they thought, and so the market was happy about it. And you know, it's like that time in Harry Potter where he says, it's like, you know, you're going to suffer, but you're going to be happy about it. So that's apparently how the market feels right now, and we have just been on a monster rally, pushed over that 4180 level, and man, we are just going like a rocket up north. Riz, what's your take on this? Because this is just nuts.
Yeah, it is. It is absolutely nuts. You know, there's no two ways about it. It's unprecedented. I get it. You know, like you mentioned, the market liked the CPI numbers. They were actually, you know, so here's what I would say. I know there's a lot of people, you know, in the political sphere, you know, making it political when it comes to CPI, but CPI was actually 0% in the month of July. So let me explain that. So a lot of people were angry, like, oh, you know, the White House is interpreting it wrong, and I get it. There's a bit of a politicizing on their end for sure, which all administrations do. But the actual fact that CPI being 0% is correct, because they're in July, not annualized. Okay, month over month is 0%. So we know inflation is always an increasing number. So we know inflation is an increasing number. Just because inflation was 0% for July doesn't mean it's no inflation. It means that it didn't grow. So this is what people don't understand. The interpretation is very important, and context. So July CPI was 0. Why? Because it didn't increase, right? That's really the way to say it. So I guess I get why people were a bit of upset about the verbiage there from the officials, and especially the White House and current administration. But apart from that, yes, it is 0%, but it is there is inflation. Annualized, it's now year over year is about 8.5%. So for those of you that are savvy and been tracking this thing, know that the previous print was 9.1% year over year annualized. So that is a shift lower. Does this mean prices have come down? No. This is where there's a common misbelief where people think because inflation is lower, prices are coming down. Not necessarily. It just means they're not going up as fast. So with the broader market, you know, when we see the stock market, we know that the stock market is something that is forward looking. And usually there's no exact time, but usually we can say that the market is forward looking by about 6 months, give or take. Okay, it's not as precise metric. But we do know the market is a leading indicator for the economy. It's a leading indicator, you know, on the upside and the downside. And we saw that. We saw the market pulling back the entire year, you know, literally from the start of the year. And why? Because it was anticipating inflation going up. Even after the Fed was saying, you know, transitory, the markets didn't believe that. The market eventually saw through that. And that's why the market was pulling back as CPI went, you know, inflation went from 4%, 6%, 7%, 8, and then to 9% annualized, right? So the market took this print as very positive, and it expected it, anticipated. You could see the buildup coming, right? Before what Chris mentioned this week, you could see the buildup coming where the markets was already pulling, you know, pulling a recovery. Um, and what we saw, at the tail end of this week, Wednesday, Thursday, and Friday, was nothing short of um, insane in regards to a face ripping rally. And in fact, the RSI is now overbought. We haven't seen market overbought levels since, I would say, like, you can almost say, March, April area, just before April. You could say maybe that was an overbought area or close to overbought. But other than that, we haven't seen that. We haven't seen the market become so overbought uh, in many months. Okay, so at least 4 to 5 months. So here we are. Where, in regards to where we are, we know that the market has recovered from the lows of about 3,700. Chris, if you want, you can bring up the percentage to the ruler, and the ruler you can measure from the bottom there, which was, what is that, 36, yeah, 30, below 3,700 actually, and then measure right where we are now. You could see we've pretty much rallied 17% off the lows. Okay, 4,300 level is very much near. I mentioned that in Elite last week. It's very much near. And if we measure now, Chris, from the peak all-time highs to now, what's the S&P 500 down now from highs? So only 11%. So we've recovered pretty much half the drop. And what a recovery it's been. It's been pretty fast. It's been pretty one directional, so to speak. Now, what do I think will happen? Again, I'm not a fortune teller, as many like to um, think they may be. I'm not. I'm open about that. I accept that. Um, there are many charlatans out there who will try and make bold predictions off of lines and all kinds of stuff, and even horoscopes, and even the solar system and all that kind of stuff. It's bonkers. But for me, I look at it from a probability standpoint. I look at it from a macroeconomic and sentiment standpoint, and of course, my years of experience. I can tell you that a rally like this in an environment where we are is not really sustainable. Many people will automatically look back to 2020, um, April and May 2020, where we had uh, an enormous um, rally in the market, even from March, April, right? So you could see the massive rally and then it just continued. That's not the case. That's not the case now. We can't draw that parallel. Okay. In fact, I see a lot of charts of people saying, this is very similar to 2008 as well. We can't draw that parallel either. Many of them, I mean, I won't even get to this. I won't get into the nitty gritty. They don't even have their charts set up. Like, they can't understand basic math for the people that are talking about that, because you can't just overlay two different charts with the numerator being the same. It just, anyways, point is, it's all kind of hogwash. We can't compare that. For now, where we're at, the market is very bullish. We don't want to fight this market. We don't want to go on and just keep on shorting this. Um, that's why what I've been saying to Elite members, as you know, um, for those of you in Elite, that you want to start taking some gains. Now, does this mean the market can't go any higher? It can, but we have to book some gains, because you don't want to be looking down the barrel, a couple weeks later and we have this rollover. It can, it very much can. I'm of the notion that this is short-term bullish environment, and in the medium term, it's bearish. Anytime we see a rally like this, especially a really fast one, the market eventually, checks itself. It eventually said, you know what? Okay, I'm gonna take some profits. Um, so it's no secret that when you know everyone starts booking some gains, uh, maybe maybe we see a persistent kind of pullback a little bit. Am I saying we're going to see 3,700, 3,600 anytime soon? No. I think that low is going to stay. for time being, unless something significant changes um, in terms of the economic picture globally, whether it's you know uh, another war or something like that going on. Okay, I don't see this level coming back 3,700 anytime soon. Okay, but that doesn't mean I anticipate 4,600 or 4,800 all time highs. I don't think the market is ready for that, nor is the economy. Now, I will say one thing: after the second quarter GDP print that we had, and I don't think I've been on this webinar since, and I can say that we are in a recession. Technical terms, I know the definitions, and there's different definitions. That is actually true, but from a technical standpoint, we can say that really two negative consecutive GDP prints is technically recession. Now, the people that look at a lot of different things, especially in the current administration, will tell you, they'll point to you, well, look at it, look at numbers, payrolls, look at jobs, and they will be right. Where we do have a very strong jobs market. Unemployment is near all time low, if not at all time lows. We have a strong job market with beating expectations. So it's hard to have an inflation in a recession, especially a tough recession, when you have a very strong jobs market still. So this is one of the reasons why markets continue to roll up higher, because it's thinking, well, job numbers are great, unemployment's so low, inflation is curling over. Wow, win, 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 right? So that's the lens that the market's been looking at it from. Uh, I am just kind of waiting for more clarity around, where's the market going to hit a certain resistance level. Now, that could be 4,300, which is very close. That could be 4,400. I think 4,400 is the next area that will be a big test for the market. That'll be a big test, right? And the reason I've been saying, um, take some gains overall, is because what if it rejects? What if it pulls back? What if we have another kind of event occur, geopolitically, economically, globally? This is why you want to kind of hedge yourself by taking some gains. I am personally right now in the trading account approximately 45% cash now. I still have my long position, right? I still have my long-term stuff, but I still have my current existing positions that either are in the red or that I have conviction in. So it doesn't mean, I completely get out, or it doesn't mean I go on a massive spree to short this. Not yet. Okay, not yet.
That was an awesome analysis. Thank you for sharing that. And Riz was talking about 43 and 4,400. Obviously, some other things in the way as well. We have this downtrend that we've been keeping an eye on, and we have the 200 simple moving average sitting right here, right on top of it. And you'll see a lot of buying and selling in that area. So we'll need to keep an eye on those if the market continues to rally. Definitely a lot of things going on, like Riz was talking about, across the world that can affect the market in positive or negative ways. It just depends on what happens. Let's go ahead and take a look here at the breakdown for the S&P 500 and see what's going on. Well, basically everything is up since we've had this rally starting. We've been really bouncing here on energy, has really pushed up higher this last week. Utilities is making a nice move, and the other indices are still below the zero line, with healthcare actually outperforming the S&P 500 and financials just by a hair over, but basically on par with the S&P 500 itself. And real estate and tech are making a pretty nice recovery over the last couple of weeks, and actually a month since July. We've been kind of pushing up. Is there anything in particular here you'd like to comment on, Riz?
Yeah, one thing that really interesting, again, it comes down to interpretation and experience, is we've seen the market move up, and of course, different sectors recover. Energy is actually still negative in since if you measure from the month of uh, mid June, whereas everything else from mid June is actually higher. So that's something that's important to see. Well, we can see that, right? Another thing that's important to see, especially with tech and real estate and financials moving in tandem, what's very interesting is utilities. Take a look at utilities. Utilities, we know, is more of the defensive type of sector in the S&P 500, this broader stock market. We know that when risk assets, like tech and all that kind of stuff drops, if people still want exposure to the market, many of them might go to utility sector. But what we've seen is the utility sector going up as well. What does that mean? That means there's inflows and buying of different utility stocks along with more riskier, more volatile sectors like the tech sector, XLK, like, financials, XLF, like healthcare, XLV. So that's interesting, something to keep an eye on. Does it, that's known as a divergence. It means, there's two things that are kind of opposite to each other. The correlation is inverse, as it should be, but it's not this time. This time they're moving in tandem. So that's interesting. Usually that tells me that the last few weeks, or it's the last month even, of this rally has been broad based, meaning no matter what, whether it's financials, whether it's utilities, whether it's tech, whether it's real estate, everything is going up with the market. So this means the market is in a risk on mode, and it has been for the last month, which shouldn't be a surprise, based on the previous S&P 500 chart that we saw. So those are some key interesting tidbits there, from this.
Awesome. Thank you for sharing that observation. That definitely gives a lot of insight as to what's going on, especially in the market, and how we can kind of look at this chart to see kind of how people are perceiving what's going on. Let's take a look here at oil and gold. Gold, I'll just get rid of this now. Not too much interesting going on here. We bounced off support a couple weeks ago. We pushed through this midterm, kind of support resistance area that hasn't been too significant since about last year. And, we're just kind of melting upwards with gold, and, it's appropriate since it's gold, you melt it. Oil, though, much more interesting. After we hit the 120 area yet again, we had a pretty hard rejection, and there's been a nice downtrend on oil here, pushing down below the 200 simple moving average, coming back up on Thursday, touching, rejecting, and pushing back down on Friday, blowing through this 93.70 support and resistance line. Riz, what's been going on with oil? Because we hear about it all the time in the news with oil and natural gas and the pipeline and all that sort of thing. What's your take on oil right now?
Yeah. So one thing before I do extrapolate on that is I remember being on a couple months ago and saying, this was probably in April, May sometime. And I said, I think we could see oil going back up to 120, but I don't think we could see much higher. I don't think the economy and the market can sustain that. We're going to see massive demand destruction. And ding, 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 look at it, what happened, right? Fast forward, we could see the market, eventually oil did go up to around 120 area, which was the previous high. And then we saw massive demand destruction. I can tell you demand destruction because I was looking at inventories, onshore and offshore inventories in the US, and inventories went up. What does that mean? That means people aren't buying as much gas. They're not buying as much oil products, right? And if they're not, that means inventory builds up at these big offshore tankers and onshore tankers. So that was very interesting. And I remember looking at it back then. I'm like, yeah, it feels good to be right on that. So that's something to kind of just point out to you. But this pullback from the 120 is not surprising at all. I did short oil a few times. In fact, the last couple months, as elite members may recall, we did well, made some money on that. But right now, we're in kind of that indecision kind of mode where it's kind of bounced up around 90. 90 seems to be a good support area for oil right now. I think as the summer, we're still in summer for North America, but usually once we see the summer season wind down, we see less demand heading into the winter not driving, but winter, hibernating type of season, right? Summer is usually very much bullish for demand, for driving and travel. So that's interesting to keep an eye on. We also know, I know since the last time I've been on, that, when it comes to OPEC, they have increased a little bit, nothing, substantive, but they have increased a little bit. Whether it has anything to do with President Biden going to Saudi Arabia, a few weeks back, maybe it does, maybe it doesn't. maybe who knows? But we do know that they have increased a little bit of supply there. So that is definitely what's also kind of put pressure on the price of oil. And another thing that's weighing on oil, apart from summer season ending, is if OPEC continues to increase. They did increase, a nominal amount, but they also left it open that they may be open to increasing in the future. They never said anything specific in terms of how much or when, but they did say, maybe if it weren't that, we don't know. I'm not in touch with anyone at OPEC. So those are the kind of key things we have to be aware of. But right now, I think 90 is a good support area. I don't have any position in oil directly, or gold, of course.
I think the saddest part about what you just said is you didn't have somebody on the inside at OPEC. I really kind of thought you did. That's a bit of a bummer.
Yeah.
All right, let's talk about some alternative currencies here. Bitcoin has really just been melting up since about the middle of June, but we've really been respecting this 25,000 area and seemingly have continued to respect that and cannot seem to break through it. Of course, we have this long-term downtrend here represented by the teal line, and it's just not much going on in cryptocurrency right now, guys. It's not too exciting. Just really kind of bouncing between 20 and 25, and that's really all I can say about Bitcoin at this point. All right, let's go ahead and open it up to questions, unless there was something else specific you want to talk about, Riz.
No, I think that was about it. The S&P 500 being a big talking point today.
Awesome.
The broader market, of course. We'll see how it goes. We are heading into I think start of September. We also have, Labor Day weekend, long weekend. That will be the official end of summer, I believe, right?
Yep, absolutely. And I want to encourage, of course, all of our elite members that if you can't make these webinars and you have a question for Riz or myself, please make sure you PM me, because I got a PM this week from Anton from Odessa, Ukraine, and I've been there many times myself, and he had, and of course, Anton, please stay safe out there. We're all thinking about you. He had 4 tickers he wanted us to take a look at, so while everybody here live is typing in their questions, let's just go ahead and take on Anton's question real quick. Had 4 stocks we want to take a look at. First was Bank of America, obviously pushing up pretty hard here after earnings, making a nice push over the 100 simple moving average, but in truth, kind of moving in tandem with the market a little bit, especially over the last 3 days. Riz, what are your thoughts on this? I'm a little kind of thinking that the move has already happened, but what's your thought?
Yeah, I agree with you. I personally don't like taking these kinds of from on the long side. I'm not going out and shorting it either. But I feel like the moves are kind of done. It kind of had like maybe like a consolidation breakout there. You can see past now the what is that, the 50-day moving average, I think, Chris?
That's the 100. The yellow one or the orange one there is the 100.
Okay, so it's past the 100 now. Yeah, I wouldn't personally chase. I mean, someone could, what they could do is maybe take calls on it, a few weeks out, and see if that momentum can continue into this week, but have a tight stop on it, right? Where that if the momentum continues, great, this thing's going to explode higher. Maybe the market does too. If it doesn't, it pulls back or it fades, you close, you get out, right? That's my personal take. But I'm not frothing at the mouth to just try and get in this. That's not really my kind of style.
Yeah, definitely. I'm not a huge fan of financial stocks myself, but yeah, I feel like this one's already kind of burnt out maybe. And obviously, of course, we're running towards that overbought area here on RSI, so something to keep an eye on. All right, next one is going to be MS, Morgan Stanley. Okay, so another financial. It looks like, yeah, these financials are rallying. This one pushed over the 200, but yeah, I would be worried about this one, especially if things are a little dicey. We're way overbought.
Yeah, this one I wouldn't really. I feel maybe it's better off going with BAC out of the 2 so far.
Definitely a lower price stock on Bank of America, that's for sure. All right, PSEC, I'm not really. Prospect Capital Corporation, that's another one I'm not too familiar with, but yeah, another huge bounce here, push over the 200, but I worry about chasing this one as well. All of these seem to be like overbought.
Yeah, they're all overbought. You're right, Chris. They're all kind of moving in tandem. Obviously,
Hmm.
some more than others. A lot more of a rip and run with this and Morgan Stanley with BHD kind of lagging in the performance. Uh, but yeah, these I think out of all three, if someone wants to take a position on the long side, maybe take it via call options. You know your max loss, um, and you have a tight stop on it because if it runs great, those call options will do great. If not, then you just get out quick. You don't let it decay. You don't bag hold.
Yeah, absolutely. That's always a good way. And then we have one different one here, energy transfer. This is one I've not heard of before. It looks mostly like penny stock BS. Have a bit of a bounce here, but this one seems to be a bit.
This is a good pipeline
Is it? Okay.
company. Yeah, yeah. It's good for has a good dividend. Good dividend yield. And you know what? We know with everything to do with natural gas, energy. They it's been an industry that's not going anywhere just yet, and they've done well. So yeah, if you want exposure to dividend income, a good dividend return that you know pays out quarterly. Chris, what's the yield on this? If you bring up open up the tab, right hand tab on the top, yep, and then you'll be able to then scroll down. What is it? What are we looking at? Dividend yield up top. Yep. Scroll up, load it up. 7.8%. Yeah, that's a great yield, right? Relatively safe. Seems like a solid company. I've traded it. I've invested in it before. Um, yeah, just not something that you ideally want to like trade unless you see a great setup. Um, so that's just my 2 cents.
Fair enough. All right. So it sounds like BAC with call options with a tight stop, and if you want dividend exposure, ET seems like a pretty decent option. All right, a couple questions here. Everybody's favorite ticker, that would be PayPal. I feel like we talk about this every week. PayPal, had some pretty nice earnings, it looks like, and that's obviously welcome. Still kind of down here in the doldrums, though, but kind of moving towards the upside a bit.
Yeah, it's kind of moved up, consolidated a little bit here, just holding the 101 area. The 101, the $100 mark is a nice area, I think, to hold. The the question now is PayPal has turned into more of a turnaround play. We know that I think it's Elliott Management, which is another hedge fund. They have a larger, decent sized position in PayPal. There's rumors that Bill Ackman might also have or be taking a position, although that I find maybe hasn't. If it had happened, it would have been out already. Bill's pretty public with his positions. Um, so I feel like this is a turnaround play. This is obviously a run up with the market, which is good. Not as much as I'd like. I ideally like it to go parabolic. I mean, I hold the stock. I'm down on it. But hey, I'm waiting. I don't honestly. I'm not at the point where I'm thinking, okay, this thing's gonna hit my break even and profit, and I'm gonna get out. I think at this point, it's more about salvaging for me personally. Um, Salvaging and losing as little as possible. That's kind of my view on it. Doesn't mean the company's bad. I think this is a good setup for those looking to go long if they haven't gone long yet on this. And they of course have done their due diligence. That's my view. But as someone who already has a position, has had a position, this is more of a turnaround play. This is more of a very beaten down stock company that I'm hoping at some point, whether it's months down the line, who knows, to eventually exit if warranted, but I doubt it's going to be at a profit for me personally, right? But for those that not in, you I don't think it's too bad of an area to take a position. But keep in mind, if the markets do pull back, you can bet that this will pull back with it along with everything else. So just be aware. We're very much in what happens with the market overall happens to everything else type of environment.
I think the nice thing at least is we've broken this downtrend. We start to like maybe we did find the bottom on PayPal here around this 67 area. So we'll have to see if that one kind of if it continues or not. And obviously you kind of hit on something there. It's like sometimes a position just goes south literally, and there's really nothing you can do about it. You have to get to a point where you can get out with less loss so that that capital isn't constantly tied up, and just a boat anchor on your account. All right, let's talk about this one. Ricardo said a dirty word here. He asked about if Tesla's bullish. I don't know about that one, but I know Riz enjoys shorting this when the opportunity strikes. Riz, what are your thoughts on Tesla here?
Yes, I shorted this last week, got out for a small profit. Luckily, I did. I think that was Friday in the morning before it really started coming live. So 900 is where it's at right now. I feel like 950, 940 is kind of that resistance mark there. I'm not bullish on it personally. I think it's something that moves large, something that's very much a story stock. It always has been, and it's also very much a cult, a very much a news type of stock. Meaning, we already know that Tesla slash Twitter both very much in the limelight, right? So I think a lot of the run has been done. It's obviously also interesting to see that those red candles are present even though the market was very bullish last week. So that's important to see there. See those red candles? Yeah, Friday was, but other than that, it was a very bearish play. So my setup when I took a short was actually right. It just didn't help that Friday turned out to be very bullish for the market and for the Tesla stock. So I did get out with a small profit. But you know what? I think if I see it run up a nice bullish move and I see markets tapering off, that will be my cue for a potential short again. Now, one caveat though is that you will notice that there's the split coming as Chris has notified. So another Tesla stock split. This is a 3-to-1. So sorry, a 1-for-3 split here. So we'll see Tesla on August 25th. If it stays at $900, assuming it will be $300 a share. So I don't think we're going to see those kind of run-ups again like we did in 2021 and 2020, where anything that splits runs up because it was a completely stupid market. I don't see that happen anytime. But it is something we want to be aware of.
Ricardo, to answer your question directly, I mean, it did just break the 200 and it came back down. So, I mean, the Tesla really doesn't seem to necessarily follow all the technical indicators as some stocks do. Honestly, we just kind of hit on it. If Elon puts a tweet out about something, or if he goes on Joe Rogan or whatever, Tesla stock moves with it. So just be aware of that. All right, I want to talk about Amazon. Oop, I typed that wrong. That was a good one. That'll be good for the video. Amazon short term. Obviously, we got some overhead resistance here with the 200 standing in the way, but Amazon has been on a nice run after earnings, even though they had a bit of a miss on that. Revenue was up. Riz, what are your thoughts on Amazon here?
Yeah, I've always liked Amazon. We had a position. I closed it for profit, albeit maybe a little bit too early. But hey, you know what? That's really I can't complain. It is kind of overbought right now. I'm kind of in that wait and see position right now. Personally, this is a decent resistance level for it. The 140-ish area. Again, we have to get more understanding of if we see a pullback in the market. The market's overall very overbought. So if we look at just from that standpoint and we see a market pullback, what does that tell us? That tells us that Amazon could also pull back a little bit. So that's kind of what I'm waiting. Does it mean that that's going to happen for sure? Okay, but probabilities is I think we can potentially see a little bit of a fade in the market, and that will give me a little bit more of an idea how far of a pullback is it. Is it a very large one? Is it a fast and furious one, or is it a tiny little fade? These are the things that I'm going to see and analyze with elite members and provide them context and guidance in real time as it happens, right? So that's something that's going to be interesting to watch as it plays out over the course of the next few weeks.
Awesome. All right. So Alex wants to know about Take-Two, TTWO. All right. Alex is thinking short to 100 with a stop loss at 120. Well, obviously we can't quite have a stop loss. Oh, you mean with a break of 120? My mistake. Okay, so yeah, I mean, Take Two is on a bit of a downturn here, if I'm not mistaken. I know you follow this a bit closer than I do, Riz. I don't think they have much in the pipeline right now, do they?
Yeah. GTA 6 has been in
Oh yeah, that's
talked
right.
about, rumors, whatever, but nothing substantive yet. They missed earnings, didn't have the greatest earnings, pulled back quite a bit uh, on the day. And I feel like, yeah, this has, from a technical standpoint, yeah, it's underperformed the market over the last month. If you could, as you can see, it's kind of gone nowhere. And you're right. If it breaks below 120, Alex, yeah, you have my blessing for a technical short. And if the market pulls back a little bit as well alongside this, well, I think that will bolster the short even more. So yeah.
Definitely one to keep an eye on. And then when I get to Nick's question here about Disney, looks like Disney had a bit of a run up here post earnings. Earnings were pretty good. It looks like, yeah, we had a pretty decent beat here and pushed up. I said he had to manage his call, but it did run pretty well. Not sure if he should let it go or try to let it go a little bit longer. So I guess, a huge push up here post earnings, but really was sold into. Obviously, people who have been holding this for a while wanted to sell into this gap up. But what do you think, Riz? Do you think do you think Disney has more
I
space to go, or where are you at?
Yeah, I have Disney. It's in the red, so I haven't really closed it yet. It's not going anywhere. Um, it does have upside in the long run, but for this kind of move in this kind of market, I feel like, maybe you want to, especially if it's call options, with expiry. I don't know the expiry that you have, but I always say it's better to take those off sooner. You're against time decay. You're against pullback in the market. You're against you know. Uh, everything. So it's important to take profits on especially near dated calls. In this case, calls for you. I would take 'em. I would take the profits. Maybe if you have multiple contracts, at least take some off, and maybe you can consider letting some run. But I would definitely take some profit.
Also to note, the RSI is pretty overbought here, and yeah, I have to agree with Riz. I would take the money and run, especially with call options. You got the gap up, take it and make it happen. Admittedly, I was impressed with this. I did not expect it to gap up as much as it did. So that was quite a big push for Disney there. So good for them. All right. Well, I'm not seeing any other questions. Riz, what are your final thoughts here for this week? What are you looking at?
Yeah, for me, I'm predominantly just keeping an eye on the market, the S&P 500 index. That will give me an idea of whether I want to enter something short, whether I want to enter something long, or whether I just want to wait and see. Obviously, we're generating some income, not too much via the Raptor method, short puts, because volatility is so low. So I'm kind of keeping my cards close to my chest. I do have some open positions, so it's not like I'm completely out of the market. And this rally has been decent for some recovery on some of our positions, and of course, some I've closed for profit. But hey, you know what? I can't complain too much. I will at some point. I do have a little bit of a hedge, nothing large, nothing crazy like before, but I do have a little bit of a hedge open. And I'm kind of waiting for more direction. I feel like right now it's too much of a face ripping rally for me to buy, meaning the rally is occurring and occurred. I'm not going there and chasing it. I'm not going to get FOMO. This is where experienced traders really come into their own, especially those with guidance and a community and mentoring like people do in Elite. Uh, you have to be able to have sitting out power. You have to be able to just let things go, let things do their thing. Maybe you have positions in the market, maybe you don't. Maybe you're completely cash. Maybe you're 50% cash. Maybe you have some positions that you hold that are in profit, or maybe they're in the loss and you're just waiting. You have to be able to see where you are, um, and then decide and not go in hastily. For me, that means not forcing trades, getting into anything, um, and taking profits when I see them and when they seem reasonable to take. For now, like I said, no individual kind of stocks that really kind of you know stick out to me from a setup standpoint, long or short, just yet, because I want to see if this market can cool off. It needs to cool off. I do think there is some a little bit more of a chance of a probability of a little bit of a fade. I'm not saying we're going to see, you know, 37, 3,800. I just think we could see a little bit of a cool off because we need some people to take profits. If it just goes parabolic, that's not sustainable. One big risk is we do know, as someone who's traded 2008, 99, not 99, but I'd say 95% or more of the population who's trading now in retail has not seen or traded through 2008 or someone of a bear market situation like that. 2020 was not really a bear market in the traditional sense, nor was it a recession in a traditional sense, because it was so fast down and so fast up. And that didn't last too long. Whereas 2008, we saw these kinds of rallies. We saw these kinds of face-ripping rallies, and then the real picture occurred, and the market opened its eyes and realized, oh wait, this is another problem on the horizon. And I'm not saying that's what's going to happen, but it's something we must prepare for and be aware of. Just because this rally goes from 3,700 all the way up to 4,300 almost in a span of a month and a half doesn't mean bear market canceled or recession is not there anymore. We are technically still in a recession, and now it comes down to of course, what unemployment's like in the future prints. What's jobs numbers like? Is there more hiring happening? Is hiring slowing down? We do need to keep an eye on these things.
Of course, the best way to keep an eye on those things is being part of Riz Elite, as you mentioned earlier, Riz. We're going to give all of this data to you live in our community. So for all of our members, you're going to get access to that, of course. But if you're not, please make sure you're watching those numbers because they are important, as they give you a overall feeling of what's happening in the market and what the macro side
and one
really
thing,
looks like.
I don't know, Chris, if just a reminder, actually, we are going to be opening Elite membership on August 23rd.
Oh,
So
there you
just
go.
about 10 days, roughly. And yeah, it's going to be a big opening finally after a few months. And what people can do is, if you're not in Elite and you're watching this afterwards, you can join the wait list. It's below it's going to be in the description. You're going to want to join that. Like, I can't tell you how many people have benefited from this. It's tremendous. We see it every day. And of course, our pedigree, our track record, our reviews, testimonials speak for themselves.
That's an amazing opportunity, guys. If you've missed your chance to get in Riz Elite before, now is the time. Here in about 10 days, make sure you get on that wait list. Click on the link down in the description. And Riz, thank you so much for coming out. Really appreciate having you on the show. It's always a pleasure having you.
Awesome. It's great. It's great to be back. Great to be on. I'm hoping to be on, I think, next week as well. But fingers crossed. Let's see how things go.
Sounds great. All right, everybody have a restful rest of your weekend. And as always, we will see you in the market on Monday.